Today we're looking at USDJPY, which continues to be one of the strongest and cleanest trends in the entire market. This move started with a textbook washout, followed by a major volatility surge, and it has now developed into what still looks like an early-stage uptrend. If we go back to the April low on the daily chart, you can see a classic washout pattern. A washout happens when the market forces out weak positions in a sharp, emotional decline. It's usually confirmed by a capitulation wick and a sudden spike in volatility. In your chart, the ATR indicator underneath tells the story perfectly. During the steep sell-down, ATR surged into a red thrust, showing that daily ranges expanded violently and that the market was in maximum stress. That kind of volatility burst is what marks the end of the prior trend. It clears the system, removes excess leverage, and resets the structure for the next major move. After that, USDJPY didn't immediately trend. Instead, it stabilized and began forming higher lows. Volatility gradually contracted from the April spike, which is exactly what you expect after capitulation. Trends don't begin when volatility is rising. They begin when volatility starts falling. What followed was a long coiling phase where price moved inside a rising wedge. Each time the market dipped, the lows were bought, while ATR continued to decline. The market was essentially storing energy. The breakout came in late October, and that is the moment the new trend officially ignited. From there, the structure improved rapidly. The moving averages aligned into a perfect bullish stack, with the 20, 50, 100, and 200 EMAs all in order. This is one of the most reliable signs of a healthy trend because it shows strong directional momentum and good participation from buyers. Even more importantly, price continues to hold above the 20-day EMA, which tells us that this is still an early or mid-stage trend. Late-stage trends often require deep retracements down to the 100-day EMA, but we simply haven't seen that behavior yet. When you switch to the 4-hour chart, the character of the trend becomes even more obvious. USDJPY has developed a very clean rhythm. Rhythm refers to the way price repeatedly pulls back to the same dynamic levels, in this case the 20 and 50 EMAs, and then continues higher. These reactions are quick, controlled, and consistent. There's no disorder, no impulsive downside, and no chaotic volatility. A market only behaves like this when buyers are firmly in control. Another important factor is the behavior of ATR today. After the huge spike during the April washout, volatility has been steadily declining. This is a key ingredient of a strong trend. Lower volatility suggests stability. It tells us there are no forced liquidations, no panic sellers, and no major stress events building under the surface. When the market is calm, trend continuation is more likely than trend reversal. Of course, even strong trends have risks, and it's important to understand what could change the picture. The first warning sign would be volatility turning higher again. If ATR starts curling up, it means the market is becoming more uncertain. A more meaningful risk appears if ATR begins pushing above its own 50-day EMA on the daily chart. That's often the moment when controlled pullbacks can turn into deeper retracements. Other early warnings include daily closes breaking under the 20-day EMA with momentum, failure to bounce from the 50-day, or any sudden acceleration to the downside on the 4-hour chart. None of these risk signals are present today, but they're worth monitoring. Right now, every component of the trend remains intact. We have a major washout behind us, a volatility thrust confirming capitulation, a long coiling pattern, an October breakout, perfect EMA alignment, a very clean intraday rhythm, and still low daily volatility. All of this suggests that USDJPY continues to be one of the strongest long opportunities in the market and likely remains early to mid-trend rather than exhaustive.